Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started right away. We have a lot to cover today. I want to keep these to 20 minutes. Markets are up today, 0.3% for Dow. Nasdaq is up 0.4%. S&P 500 up 0.4%. Russell 2000 up 0.7%. It's a mixed market. Netflix is down 3%. Industrials are down across the board. Oil stocks are up, and we're going to see why in a second. Tesla is up 3%. Google is up 2%. And healthcare is generally up. Everything else is pretty much mixed. Oil prices have risen in recent periods. As you can see here, oil prices are up about 10% in June. And this doesn't bode well for inflation data in June that's going to come out next month. Tomorrow, we're going to get CPI data for May, and CPI year over year is expected to be 2.4%, according to Cleveland Fed. Core CPI is expected to be 2.8%. PC, that's going to come out later this month, is expected to be 2.3%, and core PC is between 2.6 and 2.7%. But June, more importantly, June is expected to be higher than May. So we see a tick up of about 0.2, 0.3% across the board for June year-over-year inflation data. I think June is the one to kind of keep an eye on, because that's when we're going to start seeing majority of the tariff related price increases being reflected in data. But tomorrow we have the CPI data coming out for May, and then on Thursday we have PPI data, initial claims, and then on Friday we have the University of Michigan consumer sentiment data. On Tesla-related news, Tesla's demand in China continues to drop at an accelerating rate. As I showed in this post, in 2023, Tesla's registrations amounted to 248,000 year-to-date period. Year after, in 2024, they were down 5%, and this year they're down 8%, and the rate at which it's decreasing is increasing. I believe the intensifying competition in China is the primary reason why Tesla, despite all the incentives that it provides, it's having to, it's seeing reduced sales. This is an article on this topic. Automaker share of China NEV market in May, new energy vehicle market in May. BYD number 1 with 28.5%, Tesla number 8 with 3.28%. You can see in this chart the tremendous gap between BYD and everybody else. Number 2 is Geely. Number 3 and 4, 5, 6, 7 are all Chinese automakers. And Tesla's market share is declining. Tesla's market share in China's NEV market in May was higher than its 3.2% share in April, but lower than the 6.9% share in the same period last year. In the first 5 months of the year, BYD's market share in China NEV market was 28.9%, while Tesla's was 4.6%. BYD maintained its position in China's largest new energy vehicle market in May, while Tesla retained the same ranking as in April. BYD's NEV retail sales in May totaled 293,000 units, up 9.2%. So BYD is growing sales and actually makes more money despite all the rhetoric that we hear from Tesla bulls. BYD makes more money than Tesla on a globally, in an absolute basis globally. And it's growing while Tesla is shrinking. These rankings released today by China Passenger Car Association. The company continued to lead the market with 28.5% share in May, though down from 29.7% in April and 33.4% in May 2024. Tesla's retail sales in China in May were 38,588 units, a decrease of 30% from the 55,000 units sold in the same period last year. And this is despite the fact that this May, Tesla had ample supply of the new Model Y. Last May, there was no new Model Y. The US electric vehicle maker ranked 8th in China's NEV market in May with a 3.8% market share, maintaining the same ranking as in April. This share was higher than the 3.2% April, but lower than the 6.9% in the same period last year. And then there's also more data on other automakers, Geely, Leapmotor, Li Auto, which is also another profitable Chinese automaker. All right, Let's move on because there's one more news from Toyota in China. And although Toyota kind of whiffed the ball with its previous EV offerings, I think this one is more promising. BZ5 electric coupe SUV with BYD Blade battery. So BYD is producing, it's one of the battery production leaders in the world. BYD is producing both to Tesla and now to Toyota its Blade battery, starting at 18,000 US dollars in China. This is incredible. This is much, much lower price than what Tesla charges for Model 3 and Model Y in China. Nearly half the price, actually. So let's see what this car offers. Toyota officially launched its new electric mid-size coupe SUV, the BZ5, with prices ranging from approximately $18,000 to $22,000 USD. Positioned as the brand's third EV, following the BZ3 and BZ4X, the BZ5 is built on the ETNGA platform and comes equipped with BYD's lithium iron phosphate Blade battery. You can see the suggested prices here. If you have any questions, comments, please leave a comment either on X or on YouTube. I try to read everything and respond to everything. BZ5 has 4 variants: 550 Joy, 550 Pro, 550 Pro Smart Edition, 630 Pro, with different battery sizes, 65 kilowatt hour and 74 kilowatt hour batteries. Provide a range of 550 kilometers and 630 kilometers respectively. I mean, this was one of the biggest things that kind of held back BZ4X, but now Toyota and many other automakers are increasing the range of rings at reasonably sized batteries. All models feature a front-mounted motor from Fuji Power, delivering 200 kilowatt of peak power and 330 newton meter of torque. The vehicle sports 90 kilowatt fast charging with a 30 to 80% recharge time of just 27 minutes. So Tesla's competitors are improving their products, but most importantly, the price is about half of what Tesla sells its vehicles for. So this vehicle is going to continue to take share from Tesla as well. So Tesla's market share in China will continue to decline, in my opinion. I have an article coming out on this topic soon. Design-wise, the BZ5 retains elements of Toyota's crossover EV concept. The front showcases a distinctive hammerhead shark shape with C-shaped headlights and a full-width LED light strip. The side profile adopts a coupe-like sloping profiline, and you can see the dimensions here. We're going to skip that part. And you can see some pictures. I want to keep these daily updates tight. And so let's move on. James Cat, one of my favorite accounts on X, predicts after today's China insurance registrations, which came in way lower than people expected. I mean, Roland pointed out that this week, China reported 8,600 insurance registrations for Tesla. The week is down 34% from last week and 28% year over year. So Tesla's decline in China is accelerating. That's the main takeaway from this data. You can see some of the graphs that Roland posted. But more importantly, James Katz says this quarter is trending to only 355,000 deliveries. If you go back to analyst expectations at the beginning of the quarter, just 2 months ago, they expected more than 450,000 deliveries in Q2, which is supposed to be a seasonally strong quarter. And over time, those estimates have come down, and they're going to continue to come down. James Cat is one of the lowest that I've seen for Q2, but his accuracy in previous quarters makes me think that we're going to be closer to 350,000 than what anybody else expects. Despite the mountain of incentives in all markets and the increased supply of the new Model Y. Okay, so despite gross margins declining, we're probably going to see another decline in Q2 for automotive. This quarter is trending to only 355,000 deliveries. All right, if you want to leave your guess on deliveries for Q2, please leave a comment on X or on YouTube, and I'll try to offer some coffee bets. Maybe we can get some coffee bets going for Q2 production and deliveries numbers. Moving on to NVIDIA. AWS cuts costs for H100 and H200 and A100 instances by up to 45%. AWS has reduced costs for accessing NVIDIA H100 and A100 GPUs on its platform. The price reductions effective June 1st for on-demand purchases and June 4th for savings plan purchases impact the P4D, P4DE, P5, and PTEN instances. The reductions vary from 25% to 45%, depending on the instance type and savings plan commitments. AWS has significantly reduced costs for accessing NVIDIA H100, which only came out a couple of years ago, and A100 GPUs on its platform. As new NVIDIA chips come on board, the prices are decreasing. But I think, in my opinion, these prices are decreasing at a much faster pace than people projected a couple of years ago when these hyperscalers bought tens of billions of dollars of NVIDIA chips a couple of years ago. So if they can't charge as much profit, as much revenue that they expect to do so after buying the product, I think that they will continue to reduce the growth, or maybe even on an absolute basis, reduce their purchases of NVIDIA chips in future years. The on-demand prices reduction is 33% for A100s across both instance types, 25% for H200 instance type, and 44% for the H100 instance. All right. In a blog post, AWS explained regular price reductions on AWS services have been a standard way for AWS to pass on the economic efficiencies gained from our scale back to our customers. All right. While AWS puts this reduction down to economies of scale, DCD has previously spoken to Ditlev Bredal, CEO of Host AI, a company offering a GPU orchestration platform to help GPU-as providers who had some concerns about the ongoing economics of GPUs. This is exactly what I mean. A year ago or so, the H100 was at maybe $5 to $6 per hour. Now it's 75 cents, maybe less. Hardware typically depreciates in 3 to 5 years, but that's happening in a year now. So this is the critical part right here. This insight right here is the critical part. This is very important in forecasting demand for NVIDIA's chips in future years. Bredal told DCD, though noted that this was more of an issue for neoclouds who have a one-to-one relationship between the rental property and the customer. Bredal explained, let's say your leasing cost is fixed over 3 years or even 5 years, but if your revenues eroded by 80% in just 12 months, now you have a real problem. In the case of AWS, the reduction of pricing is unlikely to hurt this business in the same way. AWS made the NVIDIA B200 GPUs generally available in May 2025 and the previous generation H100s in July 2023. All right. In other news, company-specific news, this also has macro implications. Wells Fargo says consumer loan growth to stay muted or drop this year. Wells Fargo's CFO, Mike, said consumer loan growth is likely to remain muted for the rest of the year and could potentially slide. I wouldn't expect large growth on the consumer side in any way, potentially even a net decline, Santo Massimo told investors on the conference on Tuesday. It was a bit more difficult to predict growth in commercial loans given uncertainty over U.S. tariff policies. The CFO spoke days after the Federal Reserve released Wells Fargo from a 7-year, $2 trillion cap on its assets imposed as a punishment in the wake of bank's fake accounts scandal. The lender plans to focus on growing most of its businesses, including credit cards, investment banking, wealth management, and commercial banking, CEO told Reuters in an interview last week. We are starting to see a little bit of share growth in investment banking, he said. We are certainly seeing lots of green shoots in terms of deals that we just wouldn't have been a part of earlier. Deal making has slowed this year as U.S. President Trump's tariff and fiscal policies roiled markets, fueling economic uncertainty. Citigroup's head of banking told the same conference that discussions for M&A continue to be super active. Okay, let's go to C because we're getting a similar take on macro-related news here. Citi to set aside more money for potential losses on loans. So Wells Fargo is saying, don't expect much growth on the loan growth, stay muted or even drop this year, which could be a sign of recession. And Citi is saying, set aside more money for potential losses on loans. And we've seen this from a number of financial players. So these are mounting circumstantial evidence, anecdotal evidence that there is a recession developing. Citigroup is set to put aside hundreds of millions of dollars more than it did last quarter to account for potential losses on loans and credit cards, an early sign that the biggest U.S. banks may be bracing for deteriorating consumer health. Given the macro environment, cost of credit compared to last quarter, we expect to be up a few hundred million. The Citigroup's head of banking said Tuesday, a conference hosted by Morgan Stanley. The figures laid out by Raghavan, also executive chair at Citigroup, point to a more cautious approach than some analysts had forecast for this quarter. Estimates suggest a decline in both provisions for loan losses and net charge-offs compared with the previous 3 months, according to the consensus of more than a dozen analysts compiled by Bloomberg. All right. Citigroup is one of the largest retail banks in the US, serving millions of clients in its home market. Raghavan said he was still reassured by the company's broader credit exposure, particularly its core book of corporate clients. We still have a few more weeks to go in the quarter, but on the credit overall, I'm incredibly reassured on the quality. Okay, so some yellow lights, but overall, Citigroup and Wells Fargo are saying everything is okay, I guess, for now. But we'll see. I don't think this bodes well for later this year. Let's go to IBM on quantum computing. IBM just took a significant step toward useful quantum computing. IBM on Tuesday said it is building the world's first large-scale quantum computer capable of operating without errors. The computer, called Starling, is set to launch by 2029. The quantum computer will reside in IBM's new quantum data center in upstate New York and is expected to perform 20,000 more operations than today's quantum computers, the company said in its announcement Tuesday. Starling will be fault tolerant, IBM said, meaning it would be able to perform quantum operations for things like drug discovery, supply chain optimization, semiconductor design, and financial risk analyses without the errors that plague quantum computers today and make them less useful than traditional computers. The news comes the day after IBM stock hit an all-time high on Monday. Shares are up more than 60% over the past year, more than S&P 500's roughly 12% gain. All right. On that news, let's keep it short and sweet. Thank you very much, everybody. Any questions, comments, please leave it below the video, and I'll chat with you all tomorrow. Take care.